Alright, what's up guys? Today's video is one that has been asked a lot of questions about, a bunch of different topics I'm going to try to cover, but mainly I want to cover, key levels. How the hell do you find key levels? How do you set triggers? And then go over my intraday strategy, what I do intraday, how I change my strategy. Do I play tickers off my watch list all the time, or how do I go about that? And then also how I use unusual whales intraday. Alright, so for the first part of the video, I really want to go over those key levels. This is something super important to my strategy, and how I've been able to, become profitable and incorporate that into my system. Something I really talk about, with the systems. So what is a key level? Basically is just a pivotal point or a support and resistance that over that level could more than likely give us a big move, right? So I'm gonna start just with SPY, because SPY does tend to respect key levels, support and resistance a lot more than tickers do, just because of the psychology and stuff behind levels, and stuff like that. So a key level, support and resistance, they mean more on the higher time frames, right? So this daily chart is going to mean more than an hourly chart, is going to mean more than the 15-minute chart, is going to mean more than the 5-minute chart, right? So, starting on the daily, we can look at these levels that are really, really big. And when we go through and we're looking at tickers, we want to see, is SPY or whatever ticker it is nearing a breakout? Does it need to hold the support level in order to bounce, which could give us a big move? Or if it falls through, can we get the big move to the downside? So I look for that a lot when looking at plays. Another thing with key levels, right? The more times a level is hit, the more of a significance, more value it plays when looking at the key level, right? So in this case, this is 471. It should be. So this 471 level is hit, multiple times. 1, 2, 3, 3, 4, 5, 6, 7, 8, 8 or 9 times, right? So that's definitely a big level. Cool. All right. When I go about making a watch list and for day trading, right, I stick almost solely to the hourly and 15-minute time frames. Why? Because I want to see levels that are important over the last 5 to 7 trading days. A question was asked about yesterday's video when it comes to on some triggers I scrolled out maybe 3 to 5 days. On others I use the daily range, right? So what comes into play with that is, so here with SPY we have this big ol' bearish engulfing right here on the finish, right? So it's finishing towards the bottom of the zone of its daily range, right? So I don't want to play it right underneath here and watch for get those potential fake outs that people talk about. So I'm going to use Adam Silver's 20-25% method. He actually just made a video on it today. I'll let him explain that because he is the inventor of that method, and he does a very, very good job of explaining why it works, how he came up with it, stuff like that. So that's something I'll tag in the video as well, just because that's a big part of how I find my levels every day. But anyways, so say SPY were to finish at this candle here, right? I don't want candles that are, I want to use candles that are above it in order to set price targets. I don't want to just hop in right away in order for a call trigger, right? Because, it could flip right on me, and then what's the point in that, right? So anyways, so when it comes to support and resistance, and when looking at this, I always use the hourly and the 15. Mainly, I use that daily to get the 20-25%, the daily range, stuff like that. So one thing I notice is this zone here, about 476. Cool. What I noticed about this zone is it used to be a resistance here, turn support, 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 and then a resistance, support again, and then ultimately I believe it'll be a resistance again. One thing about support and resistance is whenever a line or a key level turns resistance, it was usually a support at one point. So support turns resistance, resistance turns support, so on and so forth. So that's when looking at levels, maybe a level for a call trigger is towards the bottom of a resistance zone or an X support zone. That just goes to show that once we close over that line or that level, that it's more than likely going to turn into support to test the top of that resistance zone. When it comes to resistance zones, this is something also that is very, very important when looking at things, right? So when looking at SPY here, I noticed a couple of resistance zones and supply and demand zones, basically. So what I see here, is the tops and the bottoms of this zone here. So, this zone here, it was used as support. This zone here, it was used as resistance. Turned back to support, turned back to resistance. So when looking for our key levels, we don't really care all that much about this middle noise. We want to see the bottoms and the top of these zones, because ultimately that is where the price is going to either be denied or supported, and it can cause a breakout in these bigger moves, right? So that's something really, really important when looking for key levels, is to look into that. What I would suggest in terms of learning key levels and how to identify them, I would just start with SPY. SPY follows support and resistance almost to a T. So just being able to look at that and then use that 20-25% method, use, multiple inflection points. The more times a level hits a key, the more times a price action hits a key level, the more important it is, right? So that's something really, really big there. And just practice that on SPY. Another one would be, I'm going to just go through how I go about with DKNG. This is one I haven't really looked at. I did play it the other day with these two, but I haven't looked at it much. So on the daily, DKNG's, about $1-ish move. So I'm looking for about 20-ish cents, 20, 50 cents from this finishing price here at 27.50 area. But I do know that, DKNG, it can get these big, big days, right? So I'm just going to hop over to the hourly, see what I notice. So already, these were my zones from the other day. Hold up. From the other day, I had my zones set right here, right? Because if we can look at this chart here, just based off the hourly, if we notice this bottom of this zone right here, 28.05, has been support of recent, right? And it took a lot to push through it. Cool. On Friday, it also fell below this zone and retested, signifying it's a very, very big zone that was possible support and resistance. So that would be my call trigger already just based off this, because of how important that zone is. Look, like big support here, turned resistance here, and then all these two double bottoms here have all tested that 28.05 level. Then when I go to identifying the next, target or scaling level, is basically all it is for me, is I go up to the next higher zone. In this case, it was 28.85 original call trigger from the other day. But I actually like this zone down here at about 28.35. Why? Because look, it's hit here multiple times. It's acted as a support here, resistance again, resistance and support in this consolidation phase, support, resistance again. So over that 28.05, my next target is going to be 28.35. I think a big thing that, beginning traders struggle with is too big of home run type goals with their price targets, right? The 5, 10, 15, 20% gains, and if we can continue and compound these gains, the 5, 10, 15, 20%, our account will build more and more over time. It might not be as fast as the people on Twitter who show us these 1,000% gains. That's okay, right? In the long term, if you want to be a successful trader, it's going to take a bunch of compounding, right? You might get those home home run hits every now and then, but more than likely, it's going to be these compounded efforts of 5, 10, 15, 20%. And that's something that's really, really important. So when I'm making my question was asked about, what levels do I use? Why do I use those levels, right? So when I look at this, I want to look at the past, 3 to 5 days and look at levels that are important now. For day trading, that's something really important because I don't really care what happened 10, 15 years ago unless I'm testing an all-time high. But in terms of day trading, I want to know these levels that are important right now in order to capitalize on these levels over these levels, and then can really help us with more confidence on our plays. On the downside of DKNG, I'm going to hop over to this. Actually, I'm going to stay here. So on the downside of DKNG, this level right here really sticks out at 2710. Why? It's the low of this zone, high of this zone before ultimately falling low, high. So when looking for key levels, I'm looking for points where it's been tested multiple times as both a support and resistance. This gives it a very, very important meaning to the overall price action and the possible big move that we look for. Those 20, 15% with the possibility of 100+% moves. And then when we break this down to the 15, I really, really like using the 15-minute chart. But on the 15, right, we see that 28.05 definite big level here. Over that, I like 28.35. We have this POC here, but over that, I like about 28.75 to 28.85. On the downside, underneath that, I like this level here about, let's see. So I'm looking for a point where I think my first target would be here about 26.75 because, right, it was a resistance here, turned support, back tested, failed support here, and then it was able to turn in support again before ultimately knifing and then breaking again on some good volume. Cool. Another thing, most of my watch list and most of my trigger points are those 0.1s, 0.25, the psych levels. And the reason behind that is because those psych levels often help to break it down in our brain in a good point of, being able to enter. So they act more as a hard support or resistance, right? And that's something that I incorporate always into my watch list and stuff like that. And then also, if I have a point that's like, 29.97, right? I'm always going to round that one to the 30 because the 30 is going to play a way bigger resistance than would, the 29.95, right? So that's something that I keep in mind when going about building my watch list as well. When it comes to identifying key levels, support and resistance, the most beneficial advice I could give is just screen time. It takes practice. It takes time. And once you begin to practice this and to really look, and look for these key levels, you start to identify it easier and easier. And that's something that's really, really cool. But there's no real way around putting in screen time. Educational stuff definitely helps. But the most beneficial educational piece that I could give to anyone would be, just put in the screen time. Look at charts, go back over, review your trades, and really, really break down and analyze why exactly a trade failed or a trade succeeded. And learning from our losses is going to be absolutely crucial to being able to trade for a while and being able to be profitable in this profession. Sometimes our levels are going to be very, very easy to tell and really clean, clear cut levels, but oftentimes it's really, a lot more complicated than that, right? I'm going to use Facebook as an example. This is an old trigger. Let me get that out of here. So for my Monday watch list, I have 340 call, 334.6 put trigger. And the reason why this isn't as clear cut, mainly on this call side, right, is because look at all this congestion here. There's a lot of congestion here, a lot of different points hit. Maybe someone interprets this 339.65 as a call trigger, or this 339.9 as a call trigger, right? Everyone's interpretation is going to be a little bit different, but I'm going to use this big psych level of 340 here, mainly because when we really look at this, this flips to an ultimate, just a big old knife after we can't hold or retest that 340 level. And that's something that's really, really important, as well as it's a big psych level being, 340. Very, very big psych level. So I like that a lot. When there's a lot of congestion, we're looking for those points where ultimately it was a prior support, turn resistance, it retests, and then ultimately starts the knife. And that's something that we can see here with Facebook, here up in these levels, this level here at 334.95 and stuff like that is, really, really just having to break it down more when there's more congestion and more points being hit within a little amount of span, like we can see here with Facebook. And then when it comes to actually learning from our levels, right, and looking at where we can improve, or did our levels really work, and how to identify them, I'm going to use this play on NIO the other day. So I had my call trigger at 28.55, put trigger 27.65 on the downside, right? But NIO ends up going absolutely insane, bust way through this 28.55 level, which I got using multiple inflection points here, inflection point here, and then ultimately inflection here before retesting and falling. But on the daily, or on, I can't remember, Thursday, Wednesday, let's see, 30th, it's Wednesday, I think. Yeah, Wednesday. All right, anyways, that doesn't matter. So as we see, NIO goes absolutely insane, busts through all of our levels, just keeps continually flying up. That's something that doesn't happen as often. That's not something that happens as often as we want it to, right? But by keying on these key levels and learning key levels, we can set over this, we could get that decent move to 29.05. That was my original target. That's honestly where I scaled most of my profit, and I scaled the last bit at 29.85. Yeah, I missed a huge move, but going through and preparing the day before, looking for these support and resistance zones, and setting a plan, price targets, where I'm going to scale, stop loss, is something that's really, really, really helpful when it comes to managing our risk and making money, becoming profitable in a really hard market, right? So that's something really cool there. All right, to kind of recap, the most important parts and how to decide on these key levels, right, is first thing, use the daily range. Use that 20-25% method. I'll have the video tagged where Adam goes over a lot more in depth, explains it better, stuff like that. And then once we've determined that 20-25%, right, then we're going to look for those psych levels where support has turned resistance, resistance has turned support multiple times, starting on the hourly and then on the 15-minute chart, and break those down. Once we've broken those down, we want to use, the next big support resistance level as our price target, and then one more higher, maybe two more higher, whatever, depending on the possible move of a stock in a day. On the downside, same thing, same mentality, except for we're going to look for support, turn, resistance, all that, just flipped of it. And that's something cool as well. After that, then it becomes the fun part, the trading part. And for the next part of the video, I'm going to go over my intraday strategy, how I execute plays, how I enter plays, and some questions asked about, do I trade solely off my watch list, or how do I go about my intraday strategy? For my intraday strategy, for most of my day trade type plays that are, longer than the 15 to 30 minutes, are actually trades instead of these little scalps here and there. I do trade mostly off of my watch list, right? And so one thing when I go through execution of my plays, I always wait for a 5 minute close above or below these call or put triggers, right? But we can also play failed call or put triggers. Another big thing in my strategy that I really try to emphasize is not trading within the first 15 to 30 minutes of open. And this is solely because premiums are usually jumping all over the place. You know, the bid-ask spreads are absolutely whack. And so then my entrance isn't going to be well. So if a ticker breaks way above, you know, my call trigger, right, I'm going to wait for a retest before playing it. NIO never fully retested this 28.55 level, but it did retest the 29.05 level, which I was able to get in here and trade it up 80 cents ish. I know I missed a huge move. It happens. Cool. When going over, you know, avoiding the fake out was a big question asked. And one thing that can really help with that is, you know, using this 5 minute chart for a close above or below the trigger levels. And then when thinking about that, you know, we gotta stay patient. I think that's the hardest part about it, is just waiting for that close above the level and don't try to trigger it too soon, right? Because that could be that fake out that we talked about. You know, we're entered maybe on a 1 or a 3 minute candle that ends up closing on the 5 minute below our trigger point, and then, you know, all hell breaks loose. It flips the other way. Could have entered the opposite side. You know, if it's a failed call, we could enter put, stuff like that. So that's something that we like to see there as well. When it comes to fake outs, is we're waiting for that confirmation. If you're really struggling with fake outs and you're missing, you know, the breakouts here, I would say only trade the retest. I still to this day am not the best at catching breakouts. So probably 75 to 80% of my plays are only played off of retests, and the other 10 to 15 are failed call or put triggers as well, but also off of the retest. So most of the time, you know, I do miss these breakouts. I'm not very good at pulling that trigger fast enough, and stop loss risk management is a big thing for me. So I just wait on the retest. I like a better entry, and that's one way I go about doing that. Another thing that I would really suggest when it comes to learning key levels is, you know, a list of 3 to 5 tickers that you could trade any day. For me, I have this top 5. I also have these 2 indices. SPY is one that I trade almost every day, whether it be a scalp or a day trade, most of the time being a scalp, as I trade my tickers on the watch list more early. But another huge thing to focus on when it comes to trading and really building our profile is focus on the quality of the play, not the quantity of plays that we can play. You know, so I only Jesus, I can't talk winter. All right, here we go. I only enter one play and watch one play at a time when I'm entered into that play. Why? Well, first off, I'm a very simple human being. My system is very, very simple. And secondly, my ADHD does not let me concentrate on more than one moving thing at once, you know. So that's something that's more of a personality thing. You know, if you can trade more than one ticker at once, go for it. Props to you. I sure as hell can't do that. You know, a big thing with the list of, you know, 5 to 10 tickers you can trade any day really helps. For me, you know, maybe there's a slow day, my triggers aren't working too well, stuff like that. I can go through, look at those 5 tickers and SPY, QQ, as seen here, and really know that I can play this either way. I know how the stock moves. I know its personality. And Channing Tatum is a big, big proponent of that, of, you know, having those 10 tickers that you can play any day, no matter what. Most of the time when I do play these, if they're not on my watch list, they are scalps off intraday levels that I create using the 5 minute. I'm going to use NIO here as an example. So for me, NIO, a big level would have been here about 30.4 on this intraday. As we see, another one would have been about here, about 30-ish, 30.05, where we do see a little bit of consolidation. This is a lower or a higher risk to reward entering here along this consolidation line, where we are seeing a bunch of buyers step in and pushing the price even higher. We don't want to chase it too much though. So if I have a really overextended stock such as NIO, I wouldn't have entered up here. Honestly, I thought it would tank over 30. It certainly didn't do that. Proved me very wrong. It ended up moving 12% on the day. So when looking, you do use these 5 minutes for little scalps intraday, and to create these levels, levels the same exact way I'd create key levels on 15 or the 1 hour, but I know that they don't mean as much because it is a 5-minute time frame, and the hourly, the 15-minute definitely help more with that. I'm going to go over kind of my indicators as well and how I use those in my intraday strategy. So VWAP and VPA are two that I'm big on, just because with VPA, right, we know that in between these lower volume nodes, the price is going to move a lot faster. It's going to slow down a little bit in these, faster, slow down, and it can also help with identifying those key levels, because the bigger zones are often going to turn resistance, support, resistance, which is really, really important to see when trying to identify those levels. A new thing that my friend Akron Trades on Twitter has taught me, and I started to adapt into my system, is Ripster's EMA Clouds. So Ripster's EMA Clouds really help when staying in a play longer and also when to enter. So I only go long on tickers if we close above this 3450 EMA, and only short if we close below. I can use the smaller one for pullback entries, the 513, or I can use it for short-term scalps. But underneath, the big 34, this brownish color, I know that I'm perfectly fine staying in a play longer on the short side. It also helps on the long side here. I know that I can stay in that until here we get this flip over. We also have this bearish engulfing ugly candle here, which would probably be a very, very good exit point. With the Ripster, with the EMA Clouds, it works more on the 10-minute time frame in order to identify the trends and stuff like that. But on trend days where the market, either buyers or sellers are in control, you can use it, and it's very helpful on the 5-minute. But when it comes to staying in plays longer, I use the 513, 3450 EMA Clouds to give me this conviction to stay in plays longer, because I am a person who is often emotional, thinks too much about the play, overthinks the play, and ended up losing some profits here and there. But this is one that I have recently incorporated in, and a big shout out, to Akron for really, really breaking that down for me, showing how it works, how to use it, and stuff like that. And then when it comes to VWAP, the reason I use VWAP really is because most traders do use VWAP when they're day trading. So I can trade off of VWAP bounces, right? Or if we get a VWAP rejection like we do here, I can enter or scale in more on the rejection, and it helps with conviction. That's really as sophisticated as I get with those indicators. I use VPA a lot more when it comes to setting levels and identifying, how fast a play could possibly move, which then helps me break down further. Is this ticker going to be on my watch list? Do I like it for a possible big play in either direction based off of this VPA, based off of the high volume nodes that we see through VPA? The last little piece of this video, I'm going to go over, my intraday strategy with unusual whales, how I use unusual whales to really help with conviction when it comes to my intraday analysis. When coupling this flow with some TA and some patterns, that's something that's really cool. So here, for instance, on Facebook, from a TA side, we have this wedge looking pattern, looks like it breaks here and breaks down. That's cool. So I know it's not holding very well. It's pretty weak. SPY was also decently weak, and we fell below that 340 level. So what I'm gonna do is when I use flow intraday, I just type in whatever ticker I'm looking into, and just gonna read this flow. What are some things that came in, things that I'm looking for. So we see here a lot of people selling these 350 calls to 1231s. Okay, so it's very, very bearish as well. This helps me with conviction. So once we get all these retests on the 340, it's still getting bought down on the price action, and we have that flow that's very bearish. This helps a lot with conviction. I think these puts ended up going somewhere between 500 and 1,000% in 30 minutes. So that's something crazy. But when using flow, I just type in my ticker here on this live flow tab, and then we can just interpret the flow. You can sort out premiums. I think my premium's set at 1K or above, just because I'm not really worried about these people putting in one size orders. I'm worried more about people spending a decent amount of money, putting in decent capital, and what their sentiment is. So when I add that plus these patterns, right, plus some TA of not being able to hold a key support level, it can really, really help with conviction, and help me stay in these plays longer, and then in turn get pretty good rewards out of it. So that's how I use Unusual Whales intraday. It definitely is a big part of everything for me when it comes to making a watch list, narrowing down tickers. But I do use it intraday as well to help more on the conviction side of things and see what my sentiment is intraday when playing a ticker.